rather than 10 to 12 million, it could get up to 15 to 20 million per megawatt. Right?
However, so where do you think, based on where we are, based on capabilities that we have, what do you think? Good morning, everyone. If you're here in West Africa, and good morning. Well, we're on the cusp of what? Good afternoon right now. And to those who are joining from other time zones, good day. Thank you for joining us for the Africa Hyperscalers Conversations, a global view. And this is an interview series where we engage global leaders to explore the ideas, investments, and infrastructure shaping Africa's digital future. If you are celebrating today, we wish you a happy Eid Mubarak. My name is Temitope Oshunde, Director at Africa Hyperscalers. And today's conversation is quite an interesting one because it focuses on one of the most important questions facing Africa's digital economy today: how the continent finances and builds the next generation of digital infrastructure. And across Africa, the demand for cloud services, data centers, connectivity, and AI-ready compute infrastructure is rising rapidly. Enterprises are moving critical systems online, governments are digitizing public services, and consumers are generating unprecedented volumes of data through digital platforms, streaming services, and of course, fintech ecosystems. However, the infrastructure required to support this growth in Africa is still developing. Across a continent of nearly 1.4 billion people, estimated to add another 1 billion in about 8 to 10 years, operational data center capacity is estimated to be a little shy of 500 megawatts, representing way below 1% of global capacity. At the same time, hyperscaler cloud infrastructure remains concentrated in Africa in just a few markets. This raises a predominant question for policymakers, for investors, and indeed for operators. How does Africa mobilize the capital required to build infrastructure that will power its digital economy? And this infrastructure, as we know, is capital intensive, is long cycle, is particularly layered and deeply interconnected with other sectors: energy, connectivity, and of course, policy. Financing this project requires alignment of governments, of private investors, of DFIs, of infrastructure operators, and of course, global technology platforms. And to help us probe beneath the surface, we're delighted to be joined today by Obinna Isiadinso, Global Sector Lead for Data Centers and Cloud Investments, and the Senior Investment Officer at the International Finance Corporation. And he works within its Global Telecom, Media, and Technology (TMT) investment team. Obinna is a seasoned investor specializing in private equity and private credit transactions, across the digital infrastructure sector, particularly in emerging markets. At the IFC, he leads teams responsible for evaluating and executing investments in the data center and cloud infrastructure sectors. Before IFC, he served as Senior Investment Officer at the IFC's asset management company, where he contributed to the firm's $1 billion Africa, Latin America, and Caribbean Investment Fund. Earlier in his career, he worked with leading investment platforms, including Development Partners International and ARM Capital Partners, where he led private equity investments across Africa. He served on boards of several companies across telecoms, infrastructure, and consumer sectors. Obinna brings a rare perspective at the intersection of global capital markets and digital infrastructure development, a vantage point that is particularly valuable as Africa enters what we believe could be its most consequential decade for digital infrastructure investments. And as demand for compute, cloud platforms, and AI-enabled services accelerates, the question is no longer whether Africa will participate in the digital economy. That transformation is already underway. The real question now is how will the continent finance, deploy, and scale the infrastructure required to host it? Obinna, it's a pleasure to have you with us today.
Thank you, Temi. It's great to be with you again.
Thank you. So let's start with the obvious. You are currently sitting in DC in the middle of a war, if there's no better way to describe it. And this Iran-US war has impacted data centers in the Gulf and so on. What are you seeing right now on ground there and across the Gulf?
Well, yeah, again, first of all, I want to say, hello to everyone out there that's watching us, that's joining with us today. And again, thank you, Temi, for inviting me to speak with you on this topic. And the conflict in the Middle East that's going on right now, our hearts and minds go out to all of those who've been affected by what's going on. And of course, we're looking forward to a speedy resolution as to the conflict in the Middle East today. From a data center infrastructure perspective, we are aware that some data centers that are owned by U.S. hyperscalers have been affected. Now, the hyperscalers, as you know, typically are designing their infrastructure in a way to ensure that there's redundancy in place. And so if for some reason one data center, for example, in an availability zone were to go down, then they will shift all of their workloads and data to the other data centers within that availability zone. The same thing, for example, if one cloud region were to go down, they will again shift to another cloud region. So, hyperscalers, as you know, they purposely design their data center infrastructure this way to ensure that no one data center, no one availability zone, no one cloud region can bring down the entire network, right? So they have purposely designed their hyperscale data center infrastructure globally in order to ensure that their customers will always be able to have 24-hour a day, 7-day a week access to their data, to their information. And so our understanding is that although some of the hyperscale data centers in the Middle East have been affected, it has not affected the overall network. There may have been some outages here and there, but these hyperscalers are adapting and they're shifting and moving their data to other locations around the world. And so our understanding is that there has been some minimal impact. It hasn't been too significant, and hopefully it stays that way. Hopefully that we don't see more of that. But the key point there is that this reinforces the value of developing a distributed network that is global in nature, in such a way that no one region, no one availability zone will at any point in time bring down the entire network.
I think this is very comforting, Obinna. And as you close, this shows really why we need to have a more global approach to this. So returning to our session for today. So the context, and you have alluded to some of this, but let me just paint it clearly. So the context today is we have, depending on who you listen to, about $3 trillion expected to be spent on AI, invested in AI, compete for AI this year alone. And then just a few days ago, there was an NVIDIA event, and Nvidia announced that it had about 1 trillion, it had crossed the $1 trillion mark for orders up to
Mm,
2027. That is one company.
mhm.
It has already gotten
Right.
about $1 trillion. How would
Right.
you describe the current wave of investment in digital infrastructure across data centers, across connectivity, across cloud, and where does Africa sit within that global landscape today?
Yeah, tell me, look, that's a great question. There's a couple of things to keep in mind. First of all, this wave that we're seeing in terms of uh, capital that is required to invest in AI infrastructure globally, it is unprecedented. When you go back and you look, you compare to other, historical precedents. If you compare it to the industrial age in the US, the industrial age in Europe. If you compare it to the real estate boom in the US, if you compare it to the internet boom, I mean, this is on par with other major, industrial level, capital, cycles that we have seen in the past. But it is going to, it does appear that it's on par and potentially could exceed several of them. Um, when you look at the some of the numbers that we're hearing, so for example, in 2026, the US hyperscalers are projecting 600 billion of capex related to AI. When you factor in all of the other supply chain players, in the US, that's going to easily, hit 1 trillion. That's just for 2026. And as you rightly said, the numbers that we're hearing over the next 3 to 5 years would be about 1 trillion a year, right? And most of that is in the US. Now, when you add in hyperscale activity in coming from Asia, when you add in European activity, the Middle East activity, LATAM and Africa, you can easily get to 1 trillion a year for the next 5 to 10 years. Okay. And part of what is driving this is that in the US hyperscalers are looking to add something like 30 to 50 gigawatts of capacity, AI infrastructure capacity in the UX over the next 3 to 5 years. Okay. Um, and then when you factor in the rest of the world, there's going to be a need. For example, in Asia is looking to add at least another 10 gigawatts. Is looking to add at least 5 to 10 gigawatts. The Middle East was on track to add 5 gigawatts. LATAM is looking to add at least a gigawatt over the next 3 to 5 years. Africa is projected to add another, let's say, half a gigawatt over the next 3 to 5 years. So, when you add it up globally, we're easily in the 30 to 50 gigawatt range, if not, add at least another 10, 20 gigawatts to that number over the next 3 to 5 years. And even if you extend it to, let's say 5 to 10 years, that's a significant amount of capital that's going to need to come in to fund this rollout. And we're looking at essentially 1 trillion a year, which is just it's a significant amount of capital. Um, and it's a lot of that is going to be is it will be used to develop new infrastructure, data centers, power, GPUs, chips, and it's going to flow through the entire supply chain. Now, to your question around where does Africa fit into this? Look, as you said earlier, Africa represents 15% of the global population, roughly, but less than 1% of global data center capacity. And so, today at 500 megawatts, Africa is essentially it's on par with the capacity that we're seeing, for example, in some US cities like Dallas, Chicago. London has over a gigawatt of capacity. India has something like 1.7 gigawatts. Same population, but almost is triple the capacity. Brazil, again, similar, let's say, population as Nigeria, but Brazil is on track to hit 700 megawatts this year. So right now, Africa is still in the developing stage, and really what we're seeing in the Africa region is that most of the demand in Africa is still driven by retail enterprise colocation demand, right? And I should say that one of the things that we have learned, we've been investing as IFC in the data center sector since 2005. And we started off as an equity investor, investing in retail enterprise co-location data centers, investing $5 to $10 million in 1 megawatt types of data center projects. And then in 2020, we expanded our strategy to become both a lender and an investor in wholesale and hyperscale data center projects. And so today, we are investors, we're co-investors with Digital Bridge in Scala data centers in Brazil, in Ames in Malaysia. We're also lenders to Yonder in Malaysia, which is another Digital Bridge portfolio company. We're co-investors with I Square Capital in Keo Networks in Mexico. We're lenders and we're shareholders in both Liquid Telecom and Wyok, and we've supported both of those companies in Africa to develop their fiber and data center businesses. We're also lenders to Raxio Data Centers in Africa as well, which is an edge data center player. So in our experience, investing in the data center sector over the past 20 years since 2005, we have seen that all markets start off as retail enterprise markets, catering to local demand, enterprises, SMEs, telcos, and governments. And that's really where all of these data center markets start. That's how they evolve. Then over time, as demand grows, as that retail enterprise demand grows, it then attracts hyperscale interest. And hyperscalers then look to take some type of capacity, some co-location capacity in those local data centers. And over time, as the hyperscalers see more demand for their cloud platforms, the hyperscalers then graduate more to wholesale data centers. And over time, as they see more and more demand for that, for their cloud platforms, they then transition from wholesale to hyperscale, build to suit data centers. And now we're starting to see AI data centers as well. And so when you look at that evolution, Africa, most African markets are still in the beginning phases, in that retail enterprise co-location phase. Okay. And you rightly mentioned there are a few markets where we do see some hyperscale demand, hyperscale presence. So markets like South Africa, which is the number one market in Africa, which is 50 to 60% of the total capacity in Africa. And then of course, you have Nigeria, which is today, South Africa is around 250, 260 megawatts. Nigeria is about a 20 to 30 megawatt market. Then you have Kenya, which is around 10 to 20 megawatts of capacity. And then so those are your top three markets, and you do have hyperscale presence predominantly in South Africa, but you do have hyperscale presence in Nigeria and Kenya, albeit it is in these co-location facilities. The other markets in Africa where we do see some hyperscale presence would be in Egypt and Morocco. So we do see some hyperscale presence within co-location facilities there. So that is where we are in terms of the Africa region, in terms of its development on this sort of continuum. Most of the markets are retail enterprise markets, and we do have a few markets that do have some hyperscale presence. Over time, what we expect to see is more of the top 3, top 5 markets will have more hyperscale demand, more hyperscale presence. And then in the secondary and the tertiary markets that are predominantly retail enterprise today, we will start to see some hyperscale presence in those markets as those markets grow as well.
Thank you so much, Obinna. I want to segue from this question. Well, stay on it a bit, but I want to reference something you had said. I saw an interview you did at PTC last year, where you discussed and I think the word you used was uneven demand. Where you
Mm.
said you're seeing uneven demand across mature and emerging markets. And you mentioned that some of the projects in emerging markets are not necessarily bankable. And you shed some light around that. From IFC's perspective, as a long term infrastructure investor, how do you assess the opportunity for data centers and cloud infrastructure in Africa today? I know you've given an overview over the current demand that exists, a bit of more of enterprise and so on. But what are you saying? Do we have the sort of demand that the world is seeing, or is the market still ahead of Africa?
Yeah, those are good questions, Tammy. So a couple of things there. First of all, when I started investing in the data center space about 6 years ago, one of the first things that we did as a team was we actually conducted a global market study. And we essentially looked at, who are the top global players, who are the regional players in the data center sector in their supply chain. What are the key trends that we're seeing globally and across regions? And then we actually ranked all of our markets, 140 markets globally. We ranked them according to certain criteria. One was, what is economic growth, the size of the economy, how fast are these economies growing? A second criteria was around demand. What is the size of cloud demand, enterprise demand in these markets, and how fast is that demand growing? We looked at infrastructure. What is the level of infrastructure in these markets in terms of power, water, fiber connectivity? Then we also looked at, what is the regulatory environment like in these countries, and is there an enabling regulatory environment? So we looked at a number of criteria, and we used this criteria to then rank all of our markets globally, and then we were able to identify the top 3 or 5 markets for each region. And so in the Africa region, that's how we were able to identify South Africa, Nigeria, and Kenya as the top markets. And we then added another 2 or 3 markets in each region that are markets that we see sort of are over time will transition, and they will grow. And in the Africa region, that includes markets like Egypt, Morocco, Ghana, and so in these markets, they have, they show this combination of this criteria that I mentioned in terms of infrastructure, demand, and all of those elements. And so one of the most important criteria for us really is picking the right markets. That's one of the things that we've learned from investing in the data center business over since 2005, because markets are growing at different paces. And so it is important to identify, what are the priority markets within a region, what are secondary markets, what are tertiary markets, and it's important to monitor these markets over time, because what we've seen is that, these markets are growing at different paces, and markets that are secondary today, in 3, 5 years from now, can then become primary markets. So there is some evolution across all of these markets in terms of how they are transitioning. So it's important to monitor them, keep track of them. Now, in terms of your question around, how do we see bankability in terms of data center projects? So market identification is going to be very important in our criteria. So making sure that we're investing in the right market and that it exhibits all of the criteria that I mentioned. And in particular, we're very keen to understand what are the supply and demand dynamics in a market at the time before we're investing. Because what we're looking to see is that there's some sort of an attractive supply-demand dynamic. Ideally, we want to see, a situation where there's significant demand, but there isn't enough supply, right? So that's the ideal. And, we're looking to avoid, markets where it's essentially the reverse, where there's more supply than demand. So that's really going to be, one of the key criteria we're going to look at. What is the state of the market? What are the supply demand dynamics? And then what is the forecast over the next 5 to 7 years? what is that supply demand dynamic projected to look like? And so that's really going to be very important for us as both a lender as and an equity investor. We will be looking, at the market level dynamics. In terms of your question on what else will factor into bankability, we will be looking at things like, the sponsor experience, the sponsor track record, the sponsor's background. We'll be looking at the type of data center that's being developed. Is it co-location or is it hyperscale? If it's co-location, what's the nature of the pipeline? What's the likelihood that that pipeline will convert into signed contracts after the co-location facility is built? If it's a hyperscale data center, we'll be looking at, whether or not there is a contract in place. If there isn't a contract in place, what is the timeline to securing a contract? And so that's going to be very, very important in terms of the bankability of these data center projects, the underlying customer contracts, when those contracts will be signed, the nature, the contract terms. So that's going to be a very important point. And then there will be a number of resource-related aspects. Is there enough power? Is there enough water? Can the data center scale if there's going to be a need to scale over time? Will they be able to get the access to the resources they need? And I would say that the other important point for us is sustainability. Is the data center being designed with from a sustainability point of perspective? And so, what is the design PUE? How much is it going to be efficient from a power, from a water perspective? So these are some of the elements that will go into how we think about bankability for different types of projects.
I think thank you so much, Obin, and I think that comment around tenants, around anchor tenants, also helps. I want to continue on that from a tenant perspective, from a contract perspective. What sort of tenants do you typically see incentivizes hyperscalers to possibly move in? Is it a data sovereignty? Is it a national cloud initiative conversation? Is it a government as an anchor tenant? Does that sort of help stimulate the appetite? So what are you seeing there? And maybe if you can just touch on some of what you're seeing across Africa.
Okay. Yeah, Tammy, I'll respond to your question. And I just want to close the loop on your question around demand and where are we seeing sort of Africa demand relative to other markets. And it really dovetails into my prior comments about where Africa is in terms of the evolution of the data center sector, right? In most other regions, they are seeing more hyperscale demand, right? So there already is retail enterprise co-location demand, but there's actually there's a significant amount of hyperscale demand. So to give you an example, in India, 50% of the demand in India is hyperscale, and 50% is co-location, is retail enterprise. Okay. In the US, for example, more than 50% of the demand for data centers is hyperscale. Okay. More than 50%. It's more like 60, 70%. Because hyperscalers, they are the major demand driver for new data center infrastructure globally. So something like 70% of all new data centers that are being developed globally are being developed either for or by hyperscalers. When you look at, for example, in Brazil, which is another large market, Brazil is in terms of hyperscale demand, it's going to be in the 30 to 40% range, but it's slowly climbing up. So there is a significant amount of enterprise demand in Brazil. But when you look at the Africa region, it's going to be, when you look at that 500 megawatts of capacity, it'll be more like 60, 70% retail enterprise and then 30, 40% hyperscale. So over time, what we would expect to see is as more hyperscalers are coming into the Africa region, that mix is going to start to shift where we'll see more of that total capacity will be driven by hyperscale demand. And so maybe from 30, 40%, it'll get up to 50 to 60% over the next 5 to 10 years, right? That is the trend that we tend to see globally, right? So to come to your question around your question now in terms of Africa, and just remind me. Let me make sure that I remember the question you're asking.
Yes, so now looking at the anchor tenants perspective. So how do we
Okay.
stimulate the
Okay.
demand? Is it national sovereignty laws, data sovereignty laws? Is it government coming up as an anchor tenant and saying, okay, I'm gonna buy co-location and so on?
Okay, that's okay. So that's a great question, and look, there's a couple of things to think about there. So when you have co-location data centers versus hyperscale data centers, you will have different types of anchor tenants. When you're looking at hyperscale data centers, build to suit data centers, typically we're looking at data centers that can be anywhere from let's say 5 to 10 megawatts. Typically, these are wholesale types of data center facilities, and you can have a hyperscaler who's taking up one or two hyperscalers are taking up that entire capacity. But 10 megawatts and above, let's say 10 megawatts to 100 megawatts, that size tends to be more of the hyperscale type of demand. And what is going to drive hyperscalers to look to enter into contracts and to become an anchor tenant for either one of those types of facilities, it's really going to be a combination of several things, right? It can be demand for sovereign AI. Maybe they're providing some sort of sovereign AI infrastructure to a government. It could be because of their cloud platform. And so if there's growing demand for their cloud platform in that market, they would want to, become an anchor tenant in a wholesale or a hyperscale data center. Now, in the future, what we would expect to see is that there will also be demand for some type of AI infrastructure, right? So, as you know, when it comes to AI data centers, the sort of the two types of data centers that we're seeing now globally are AI training data centers and AI inference data centers. Now, the training data centers tends to be data centers that are quite large, and they're at a minimum around 100 megawatts, and they can scale up to a gigawatt. So we're seeing a lot of those types of data centers in the US. They tend to be around 300 megawatts, and they're scaling up to at least a gigawatt, sometimes more. And in markets, in large regional hub markets, in developing economies, so markets like Brazil, like India, like Malaysia, we are seeing large hyperscale types of campuses that could be used for AI training workloads. So in markets like India, we're seeing 100 megawatt facilities that are scaling up to a gigawatt. And so in Africa, we don't have any AI training data centers as of yet. I think in South Africa, Terraco is the one data center operator who has built a 100 megawatt facility. So potentially that could be used for training purposes. But it is not being used for AI training. It's being used for more sort of traditional cloud hyperscale demand. So that is an additional sort of opportunity to where we could see hyperscalers could become an anchor tenant. But then what is more likely in the Africa region would be AI inference data centers. And these could be anything between 10 to, let's say, 50 megawatts. And these are data centers that are being used to essentially provide capacity for various users to interact with the models after they have been trained. So first, the models are these large language models like ChatGPT, like Claude, like whatever the models of your choice are. These models are first trained over 12 to 18 months in a large AI training data center facility. And then that training data can then be moved to an inference data center. And then when customers, whether they're consumers or enterprises, are interacting with the model, they will be interacting with the model in an inference data center. Now, the difference between those two data centers is that inference data centers tend to be closer to the user. So they tend to be located in urban locations, they're in cities. The training data centers tend to be outside of the urban city locations because of their size, because of their scale. So what we one of the trends that we expect to see in Africa is that we would expect to see a number of these AI inference data centers being developed in different parts of Africa because the scale will be smaller. They will be able to bring them closer to consumers, and then it will allow consumers, whether it's mobile consumers, enterprises, to interact with the various models that have been trained in other locations. So you could have models that are being trained in India, trained in the US, trained in Asia, and then that data is being brought into an inference data center in different locations, different markets within Africa. And so that is another way where you could have either a hyperscaler or potentially a foundation model company as an anchor tenant in one of these types of data centers. So there's going to be a number of ways over time, over the next 5 to 10 years, where we can see demand for anchor tenants for larger facilities, whether they're wholesale or potentially hyperscale or in the future AI data centers. And that will be separate from anchor tenants for co-location data centers. These co-location facilities, they tend to be smaller, so they could be anywhere from 1 to 5 megawatts, maybe even between half a megawatt to a megawatt. But you can still have local enterprises, sometimes governments, even telcos can be an anchor tenant in a co-location data center facility as well. And so there will be a number of ways where we expect to see anchor tenants helping to underpin the bankability of these different types of data center projects in the Africa region.
So thank you, Obinna. One of the things I've heard is, and I'm happy that you've just clearly delineated AI training from AI inference data centers. One of the things I've heard is, from a cost perspective, that Africa may not be able to participate like significantly because obviously AI training requires more compute, requires a lot more investment, and so on. And then this follows the conversation I had with Martin Quina a few weeks ago, where he spoke about agentic AI and how that's actually going to be the model for a lot of enterprises. They have, rather than having the hyperscalers developing agentic AI, is going to be more local enterprises, more banks who are able to develop their own AI that customers can use. So maybe those can now be located in inference data centers, because those ones are more closer to the edge. But the real question is, which one do you think, from a funding capacity perspective, from a where we are perspective, where should we be steering more towards? Should we, obviously we have to play in this AI race.
Yeah.
However,
Yeah.
so where do you think, based on where we are, based on capabilities that we have, what do you think we should focus more on?
Yeah, it's a great question, Timmy. So look, there's a couple of things. First of all, from a cost perspective, globally, what we tend to see is that the rule of thumb is that it costs around $10 to $12 million per megawatt to build a new data center. Okay. And that's going to be what that will include will be sort of the infrastructure around the data center. So this is the power, the water, the core and shell, the foundation. So essentially the construction, the land, all of those elements, that roughly it's costing about $10 to $12 million per megawatt to build the infrastructure for a data center facility. Now, within the data center, all of the IT equipment, the chips, the servers, the racks, that's costing essentially another $10 to $12 million per megawatt. And so roughly it's, the rough sort of estimates that we're seeing is that it's, half of the cost of developing a data center is sort of this infrastructure component. And then the other half tends to be the IT component, the chips, the servers, the racks, and things of that nature. Now, for AI training data centers and AI facilities in general, the cost tends to be a little bit higher. So it can be, rather than 10 to 12 million, it could get up to 15 to 20 million per megawatt, right? And what's driving that higher cost is the increased power density of the AI equipment, right? As you probably know, the chips, the racks that are used for AI training inference, they use a lot more power than the traditional cloud and enterprise racks, right? So AI racks now, the minimum that we're seeing is 30 kilowatts per rack. And the trend is that it's really getting closer to 100 to 200 kilowatts per rack. And we're also hearing that, for example, NVIDIA is going to come out with a 600 kilowatt rack and a 1 megawatt rack over the next 12 to 18 months. So the trend is that the power density of these racks is increasing, and that's increasing the cost. Okay. Um, but there is this sort of continuum in this range when you think about the cost of developing a data center in terms of the infrastructure, and then the cost of the IT equipment within the data center. And the key thing to keep in mind is that different regions will be at different points of that scale. So, for example, in the Africa region, what we tend to see is that Africa is going to be somewhere in the 10 to $15 million per megawatt in terms of development cost. So it does cost a little bit more to develop these um, co-location data centers, hyperscale data centers in the Africa region versus other regions in the world. Part of that increased cost is driven by a number of things, whether it's labor related in terms of having to we have to bring in a lot of expert labor into the region to help to develop these projects. Some of that is materials related. We're importing a lot of the materials to develop these facilities. And part of that is also there higher taxes, import duties, and when we're bringing things into these different countries, there's just a lot of additional costs that data center operators and investors have to bear. And so as a result, the overall cost tends to be on the higher end of that range, as I mentioned earlier. Now, in terms of your question around what types of facilities should we be developing, look, at the end of the day, as I mentioned earlier, where we are in the Africa region is most of our markets are retail enterprise co-location markets. So we need to continue to develop co-location data centers because that's where most of our demand is, right? And we need to be able to develop more efficient data center facilities, and we need to develop facilities that fit within the supply-demand dynamics of each market, right? So that I think is sort of the minimum table stakes for most African countries is to continue to develop these co-location facilities that can cater to and banks, multinationals, governments, telcos. There's going to be a need to continue to develop those types of facilities. In some markets, and I mentioned some of them already, there will be a need to develop larger facilities, wholesale facilities that could be 5 to 10 megawatts that will cater to hyperscale demand. And some demand from large enterprises, large global or regional enterprises within the Africa region. So there will be increased demand for those types of facilities. And in a few markets, there will be hyperscale demand. And so these will be 50 to 100 megawatt types of facilities. Over time, we would expect that we will see some facilities where they will be hybrid facilities. So they could be used for co-location and AI inference. So you could have a 20 megawatt facility, 10 megawatts is for retail enterprise colocation, and another 10 megawatts is for, let's say, AI inference. And that's going to be something I would expect to see in some of the larger markets where there will be demand for both AI inference, maybe from the telcos, from mobile operators, and colocation demand as well. So I think in the Africa region, it's really going to be a market by market dynamic where we have to go into every market and we have to look at, okay, what is the demand? What's the nature of the demand? What is the forecast in terms of growth of demand? And then what types of data center facilities should we be building in that market given that type of demand?
All right, so clearly there is going to be a demand for all types of whether enterprise or colo or AI. So now it's going to require funding, right? It's going to
Yeah.
require patient capital. Being a data center, some of the figures you have said, 10 to $15 million to build a 1 megawatt, and then obviously based on whether inference or so on, that cost rapidly
Yeah.
increases. What financing structure are you seeing that is particularly effective for this sort of investment in emerging markets?
Okay, yeah, that's a great question, Temi. And there's a couple of things to keep in mind there, you know. So well, first of all, in our experience, what we have seen is that when data center projects are being developed, the sponsors behind these projects typically are starting off with equity capital. Okay. And they're using that equity capital to essentially, for the pre-development and the initial development phases of these projects. And then that's for both the co-location and hyperscale data centers. And so what does that mean? So that would include, for example, acquiring the land, getting the land permitted, getting the land ready for development, getting all of the licenses that are required. That would include, for example, securing power, connecting the sites to, let's say, the grid in that market. If it's going to be an off-grid source of energy, then, essentially, starting to develop the infrastructure for that off-grid energy source for the project. So all of these types of activities we would include in sort of the pre-development phase. And typically what we're seeing is that those activities are being funded with equity capital, with risk capital coming from sponsors, and/or the management teams. Now, for these co-location data centers, because of the ramp-up risk that is associated with these types of projects, what we tend to see is that the sponsors are essentially funding most of the construction of those types of data centers with equity capital. And once the data center has been fully uh, constructed and built, they will then start to convert their customer pipeline, they will convert that pipeline into signed contracts. Okay. Um, with co-location data centers, it is very rare that you'll see anchor tenants signing up for contracts before the data center has been built. Typically tenants want to see that the data center has been completely built, that it's up to, international standards. They want to test the facility. And so they want to see that the data center is working as it is supposed to before they will enter into a contract. Okay. Because once the customer enters into a contract, they will be liable to start paying their lease payments to the data center operator. Okay. And so as a result, what it means is that for co-location data centers, the sponsors need to be able to fund these projects with equity to get it to the point where the construction is finalized, and then they can start to get signed contracts. And even after the contracts are signed, it will take another year or two for the data center to sort of stabilize. So for example, the construction period tends to be, it's taking about 18 to 24 months to basically go through the whole process of securing the land, getting the permits, bringing the power, and then building the foundation, the core and shell, and then completing the construction of the data center. That process is typically taking about 18 to 24 months. That's what we're seeing globally now. Okay. The larger facilities are taking more. It can take longer. It can take 24 to 48 months. But typically it's in the 18 to 24-month range. Now, if it's a co-location facility, as I was just saying, it can take another 2 years, sometimes more, for the ramp up. So for the occupancy utilization of that data center to go from, let's say, from 0 to 30, 40, 50, 60%. That can take another 2 to 3 years. And so there needs to be some equity capital that will then essentially, cover some of the operating losses until the data center has reached a level of occupancy where they're generating enough cash flow now that it can cover its own expenses. And at some point during that ramp up phase, the sponsors will start to look for some debt financing. Okay. They'll start to look for some debt so that they can refinance some of their equity, take some of the equity off the table, and then potentially use that to expand or, go develop another project. So that is the financing sort of mix and evolution that we tend to see for co-location data centers. On the hyperscale side, it's a little bit different. For wholesale and for hyperscale data centers, because they're much larger and because they typically will, the bankability of those projects is really driven by anchor tenants. Okay. What we tend to see is that the sponsors behind those projects will still fund the pre-development activities with equity. They will start off with equity funding, but they will typically look to secure an anchor tenant much earlier in the process. Okay. Ideally, they will look to secure a contract prior to construction. Okay. Either prior to construction, during, or maybe sometimes during construction. We do see sometimes some sponsors are securing contracts after construction, but that is rare, right? So that is essentially spec development, and we don't see a lot of spec development in most of our markets globally. Okay. There's really little of that type of activity in the data center sector.
Spec development is speculative development.
That's right. That's right. So that's development that is, where the data center is being built essentially with no anchor tenant in place. Okay. And so what we tend to see is that the sponsors behind these projects, they have relationships with hyperscalers. They are working towards, they are in negotiations, they're in discussions with several potential anchor tenants, and their goal is to secure an anchor tenant prior to launching the construction process. At the same time, they are then having discussions with lenders such as ourselves, as IFC, to have us provide them with the debt financing, for their project. And what they're trying to do is they're trying to sequence everything actually in a parallel fashion. So, historically, what we were seeing is that operators were looking to sequence the different parts of these projects in a more sequential fashion, where they would, they would focus on the pre-development, then they would get a contract, then they would look for the financing, then they would start the construction. Now what we're seeing is, sponsors and operators are actually, they're progressing with everything in parallel. So they start the pre-development. They're at the same time they're starting to have discussions with anchor tenant hyperscale clients. At the same time, they're also starting to have discussions with lenders such as ourselves and potentially equity investors if they need to raise more equity. And the reason why they're pursuing everything now in parallel is partly because there's more competition for the most attractive sites. So you have to move quicker now if you're going to secure a site. And also because there's now more pressure from hyperscale customers who are looking to deploy their infrastructure quicker. So they have very, they really want to be able to get onto their sites and have their cloud platform in these markets much sooner. And so as a result, when it comes to wholesale and hyperscale data center projects, we're seeing the sponsors, the operators they're really moving in parallel. but the goal really, especially from a lender's perspective, is that we want to see that there's a contract in place or will be in place as as soon as we're providing our financing. And that's typically how we're looking to structure our financing as well. That either there is a contract in place or there will be a contract in place. And so we may be able to structure our financing in such a way on the debt side that we can commit to some financing and we can make it available, but it would only be disbursed once we know, once we have seen that a signed contract is in place and that is with a credible hyperscale tenant. And so that is typically how, IFC, how we are structuring our financing. And that's how we're seeing a lot of other lenders globally structured as well.
And I think it's good that we've started on the lending part. And obviously, lenders like yourself, you're a lot more long term, focused to obviously much more available capital from banks and so on. Another long term lender is obviously pension funds. Pension funds, sovereign wealth funds that sort of sit on a significant pool of domestic capital. The last I heard, Africa has maybe about close to $1 trillion. If you add pension funds of about $700 billion, and then sovereign wealth funds, which is maybe it's over 200, taking us closer to maybe about $1 trillion. Why aren't we seeing? Because the goals are aligned. They are both pension funds and sovereign wealth funds. They want long-term investments. But why are they not? Why is that capital? Why is it underdeployed in digital infrastructure assets in Africa? And what can be done to sort of incentivize them into doing a lot more of it?
Mm. Yeah, look, those are great questions. Let me first of all take a step back. Like globally, institutional investors are still underinvested when it comes to digital infrastructure. Okay, so that is the global trend. Some of the figures that we're hearing, Temi, is that something like maybe 5% of institutional investors' portfolio is exposed to digital infrastructure. So most institutional investors, they have a lot more exposure in private equity and other sort of more traditional infrastructure asset classes, right? So digital infrastructure is still an area where investors are underinvested, and they actually are still learning about the space. Okay, so most most investors are still learning about it. They may have some exposure, for example, to mobile networks, mobile operators through the public markets, because there's a number of publicly traded mobile operating companies. Same thing with fiber, same thing with towers. So you may have some exposure there, but at the end of the day, it is still it's still limited. But the trend is that it's growing, and I think what's part of what's driving that is uh, from a growth perspective, I think investors are seeing there's significant digital infrastructure has very strong tailwinds from a growth perspective. I think a lot of investors have seen, especially since COVID, that digital infrastructure is it's not a luxury; it's a very important utility, and it's mission critical. So this is mission critical infrastructure, and so and when you look at the numbers that we talked about earlier in terms of the demand for just AI infrastructure. I mean, that's we're talking about very large numbers, right? In the trillions, and this is just for AI infrastructure. Now, when you add on the capital needs for other types of digital infrastructure, whether it's fiber, towers, uh, you know, um, expansion of mobile networks, there will be a need to provide more capital for digital infrastructure globally for quite some time. And so I think the trend is that we will see the percentage of institutional portfolios that have exposure to digital infrastructure will increase. Within the Africa region, we have that exposure is still quite limited. And so it's that is definitely going to be an area where we need to see we need to crowd in more private sector capital. And that's one of the things that we're doing at IFC. When you look at our portfolio, for example, in digital infrastructure, we have almost a $3 billion global portfolio. About 60% of that is in the Africa region. So Africa is actually our number one region in digital infrastructure globally. We were one of the first lenders and investors in mobile operators, in towers, in data centers, in fiber in the Africa region. What we tend to see in the Africa region is that there isn't enough capital, but there's significant demand. So the supply-demand dynamics from a capital perspective are still quite attractive in the Africa region. And so we are seeing more private capital coming in. There are a number of private equity firms investing in digital infrastructure. There are some pure play digital infrastructure private equity funds in the Africa region. But there's a big opportunity to have more local capital, whether that's pension fund or sovereign capital, to support the development of greenfield infrastructure, digital infrastructure development, as well as acquiring stabilized digital infrastructure assets. Okay. And so these are areas that we are definitely interested in supporting. And so we will continue to, support, provide financing, both debt and equity capital, for digital infrastructure projects in the market. And, we see our role as definitely crowding in more private sector capital, in the region. And over time, as these institutional investors in the Africa region, pension funds, sovereign wealth funds in the Africa region, as they become more educated and more sophisticated and more comfortable with the different business models, we expect that there will be more capital that will follow ourselves and other DFIs who are investing in this sector in the region. And so those are the trends that we're seeing, and those are some of the things that we would expect to see, and that's how we see these local institutional investors, what they will need, some of the things that they will need in order to, over time, increase their exposure in this space.
Okay, thank you. And I think it's a lot comforting to know that it's just an awareness problem. And I think once they understand more of what the opportunities are and they get more comfortable, we'll be able to see some of these guys with pools of capital moving more, because we've seen a lot of that. We have the CPP, the Canadian fund, is investing a lot in digital
Yeah.
infra, and obviously it will be a lot more. It will be better to see local capital here really investing in this.
And
So,
one thing I should mention there, Timmy, is that that comparison that you're mentioning is the reason why you're seeing that is because these institutional investors, pension funds, sovereign wealth funds in the more developed markets, or in the Middle East, for example, there is a capacity element there, right? Where they have a significant amount of in-house capacity that actually comes from private markets, whether private credit, private equity background. And so they're able to, and that's what provides them with the comfort level, because they have investment teams who have, structured and executed these investments, managed investments, even maybe executed. So they've gone through the whole cycle. And some of these pension funds, some of these sovereign wealth funds, they are really structured as they essentially they have private equity teams, but they have those capabilities in-house, and that's why they're able to deploy significant amounts of capital. That's why they're comfortable with the business model. And so that is part of what we need to see, right, in the Africa region, where you need to see those two things, where you need to see the comfort with these different business models that are involved with digital infrastructure, whether it's towers, data centers, fiber. So we need to get we need to be more comfortable with the different business models, and we need to have those capabilities internally or potentially partnering with external players to be comfortable with executing, private market, private equity, or private credit types of transactions. So those are some of the things that we need to see within institutional investors within the Africa region before we start to see more exposure, increased exposure in this space.
I think that that's there's definitely an opportunity to for trainings like that for private capital and obviously pension and sovereign funds. So we've touched on hyperscalers, their interest in Africa, what they would like to see. We've touched on the funders and then trying to get more local capital involved. So now looking, let's imagine there are actually some government people on this call. Let's imagine that they're also listening and they're trying to attract hyperscalers and trying to attract some of those investments in their countries. What should they be looking at doing to incentivize the big guys to come in? I think everybody is trying to get the hyperscalers coming. What should they do? What can they do to sort of incentivize really these guys to come in?
Yeah, it's a great question, Timmy, and it's a question that we do receive on a regular basis from governments around the world, and we are seeing an increased trend globally where governments are looking to attract hyperscale interest into their markets. They are looking to attract hyperscale investment into their markets, and we are seeing an increased trend of governments who want to participate in this AI race, and they want to have AI infrastructure being developed in their market, right? So that is definitely the trend that we're seeing, and as a result, we are actually within the World Bank Group, we have created the Knowledge Bank, which combines our global capabilities, from an industry perspective within IFC with our global capabilities within the World Bank. And we've created this new entity, the Knowledge Bank, so that we can provide, end-to-end sort of seamless solutions and advice to both public and private sectors. And so this is definitely, something that we are actively involved in the cloud and data center sector globally. And we have seen, that there are a number of governments who have been or who are very proactive in this area in terms of being able to attract hyperscale interest, hyperscale investment in their markets. And just to give you some examples, I'm sure you're familiar with in the Indian market. India just recently had their India AI event a few weeks ago, and there were a number of announcements as a part of that event. And one of the announcements that the government made was providing tax incentives for the next from now to 2040 for investors who are coming in who are going to basically build data centers in India. Okay, so that is one example of how India has is going about attracting capital, foreign capital, and hyperscale interest into their market. Obviously, in India, India has they have all of the hyperscalers in their market. The government has entered into contracts with all of the hyperscalers to either to provide access to their cloud platforms. In some instances, the hyperscalers are managing data centers on behalf of the government. So there's quite a lot of engagement between the government and these hyperscalers. And in some instances, it's because the hyperscalers are helping the government to essentially migrate to the cloud, right? So they are helping the government to digitize to provide e-government services, whether it's digital ID or potentially helping with payments. But there are various aspects of migrating the cloud, migrating government services to the cloud that governments are looking to leverage various hyperscale platforms, and they're entering into contracts with these hyperscalers. And so that's one way that India has attracted significant hyperscale interest and investment into the Indian market. Um, India, for example, has also recently announced that they're going to secure up to 40,000 GPUs to develop AI infrastructure in their country. Okay. That GPU infrastructure will be used by government, it will be used by small businesses, by enterprises, it will be used by different types of players within that market. That is also going to attract foundation model companies. It's going to attract hyperscalers as well. And so, there are, and I should also say that, the government in India has also been very proactive about bringing in more subsea cable infrastructure, fiber, international subsea cable, um, uh, fiber connectivity into the market. They've been very focused on developing the energy infrastructure in India. And so that has also helped to attract hyperscale interest, into that market. So there have been a number of ways where, a market like India has uh, been able to attract hyperscale interest. And I think that in the Africa region, we need to look at some of these countries and study what they've done and see what can we replicate in different African markets. For example, in the governor of Brazil has announced that they're going to deploy $350 billion towards developing AI infrastructure in Brazil. If you look in Malaysia, if you look in Asia, countries like Malaysia, like Thailand, like Indonesia, the governments there, have made announcements of their intents to, to digitize their government services, to work with hyperscalers, to help to migrate some of their services, their infrastructure to the cloud, and so. I think when we look at the Africa region and in terms of what, different governments can do, our view is that there will be a number of areas of opportunity, whether it's on the regulatory side, developing an enabling regulatory environment that helps to attract hyperscale interest, hyperscale investment, into a market. Whether it's, things like providing, tax incentives, or potentially helping investors, helping hyperscalers to secure land, secure power, and not only secure, but making it, fast tracking the process, right, to, for pre-development of data center projects, right? Providing these, long-term tax incentives, providing, for example, you know, anchor tenant types of commitments that will make that can make projects in different markets, in different African markets, bankable. Um, Creating agencies, special agencies that are tailor-made for uh, working with digital infrastructure operators, especially global players who are looking to come into a market, to make it to fast track and make it quicker and easier for these types of players to be able to enter the market, set up their companies, and be able to deploy their capital, deploy their infrastructure, and start to provide their services into the market. So our view is that there's going to be a number of ways for governments to enter into to create to create the environment that will attract, the type of, investment and support and infrastructure that will be needed. And it won't be the same. In each market, it will be different, right? So what we see in Nigeria, South Africa may be different from what we see in Egypt and Morocco and Ghana. And so every market will be different. But ideally it needs to be tailored to the needs and the demand in that market and what the different governments can do. But I think it's going to be important to learn from what we're seeing in these other markets globally, like India, like Brazil, like Malaysia, and see how we can replicate that, or potentially tailor that to different African markets.
Thank you, Obina. Um, so power. Anytime you talk about data centers in Africa, there's always one person always brings up the power conversation. Oh, power is an issue. And power availability and obviously the costs of data center builds have been increasingly cited as constraints to data center development. Um, from where you sit, how significant do you think this challenge is? And what sort of partnerships between operators themselves and energy providers, for instance, could unlock larger deployment?
Hmm. Yeah, so Timmy, this is really a key question, right? And what we're seeing globally is that one of the key constraints in terms of developing new AI data center infrastructure is power, right? For example, in the US, what we're seeing is that any data center that is more than 25 megawatts, typically those projects have to essentially wait for anywhere from 4 years to potentially longer to get power to be delivered to their site. Because in most states in the US, the utilities, the electric utilities, there's just more demand for power than they can provide, right? And this is more of a problem with the larger projects, right? So the larger the project, the larger the weight. So, for example, with hyperscale projects for AI data centers, when you look at all of these announcements for the AI, for the foundation model companies, for the hyperscalers, they're trying to develop 1 gigawatt projects. It's going to take, um, you know, more like 7 years to bring all of that power to those sites, because the utilities have to invest significant amounts of capital to be able to bring that power to those sites. Okay. And so as a result, and when you go to Europe, for example, it's it's almost impossible to see 1 gigawatt types of projects being developed because there's just no power in most of the flat D markets, which are the top markets in Europe. There's just no power, right? You have to wait years, okay? Um, and so that's why we're seeing development in places like in the Middle East where they have significant access to power. So we're seeing more development there. But obviously, with the conflict now, that's going to be put on hold. But in most markets globally, especially with these larger size projects, 100 megawatts and above, power tends to be the major constraint. Okay. Um, and so, there's and so how are operators, managing this type of issue? I mean, one of the ways that we're seeing is that operators are looking to develop off-grid projects, right? So rather than depending on the grid completely, they're trying to develop projects that combine grid and off-grid. In some instances, we're seeing, operators are bringing in what they call bridge solutions. And so they may start off for the first 18 months or 24 months with some sort of a bridge solution. That bridge could be power that is being provided through gas turbines, so potentially natural gas. It could be it could be power that's being provided through another through other alternative sources as opposed to just the grid. And essentially, the idea would be to wait for the grid to start to come to the site. And I should say most of these projects they're developed in a phased modular approach. So if it's a 1 gigawatt project, typically the first phase would be a few hundred megawatts, maybe 300 megawatts for the first phase. And then every 12 months or 18 months, another phase will be brought online and another 300 megawatts will be brought online. That's typically how these data center projects are being developed. So they're being developed in a modular phased fashion. And what that does, it also helps then to manage the power constraints as well. And so that's going to be one of the key sort of elements that you see in projects in Africa. We would expect that projects need to be developed in a phased modular approach as well, so that they can handle sort of the power constraints in each market. Now, in the Africa region, what we tend to see is that most markets are have essentially there's more demand for power than there is supply. There's significant demand and there's not enough supply. So there tends to be a generation issue, and in most markets as well in Africa, there tends to be a transmission issue, and so the quality of the grid is not as the grid needs to be upgraded. There's issues with transmission and distribution, and so in a number of African markets, we are seeing that operators, they are looking to secure their own sort of dedicated infrastructure, even if it is on via the grid. They're looking to secure some sort of dedicated infrastructure. In certain instances, we are starting to see some data center operators are developing some renewable power sources for their projects as well. So, for example, in South Africa, there have been some announcements. Terraco has developed some renewable, is in the process of developing renewable energy for their project. I believe it's something like 100 megawatts. Amazon apparently has developed, I think, 10 megawatts of renewable capacity in South Africa. And so there will be, operators who will look to, bring in or source alternative sources of energy as opposed to just 100% reliance on the grid. They'll look to develop a mix where they will look to have some access to the grid, whether it's some sort of dedicated access or it's just a regular connection to the grid as other users, commercial users have. But they will then look to add on these alternative sources, whether it's through natural gas, through solar. In North Africa, there's also the potential to use other renewable sources as well. And so eventually what we would expect is that there will be a mix of energy that will be supplied to these data centers, especially as they grow in scale. Because, in most African countries, data centers are just one of several sources of demand, right? There's so many sources of demand when it comes to energy in most African countries. Data centers are just one user. And so there needs to be, this is an opportunity in the Africa region. There needs to be a significant amount of capital that needs to be deployed into energy infrastructure in the Africa region. And I'm sure you're aware of the IFC a project where we are looking to invest significantly, working with other investors, other DFIs to invest in energy infrastructure across Africa. And that was a project that we launched last year. And so there needs to be a significant sort of crowding in of more capital, DFI capital, private sector capital into energy infrastructure. And as that capital is being crowded in, as we're deploying more capital into energy infrastructure, some of that new energy infrastructure will go towards data center capacity. But you will see, and the other thing I will say is that as these projects grow in size, the data center projects, we will see more energy to data center infrastructure being developed. And so typically, what we tend to see globally is that when data centers are below 20 megawatts, they're not large enough to attract dedicated energy infrastructure solely for with the data center as the off-taker. But once they start to scale past 20 megawatts and get to 40, 50, 100 megawatts, those tend to be they tend to attract dedicated energy to data center infrastructure projects. And so there are a number of infrastructure investors, energy investors, energy operators who will start to look to deploy energy infrastructure as the size of the data center projects increases and grows. And so that is going to be a trend. We've seen that in other markets, and so we would expect that over time we'll also start to see that in the Africa region as these projects are growing as well.
All right, thank you, Obinna. Um, so I think looking globally now and situating Africa within that global context, you would see that increasingly influence sits, if you look at global economy, influence sits with those who control compute, who control cloud, control connectivity and interconnection infrastructure, which is usually the global north. Um, where do you think Africa realistically sits in that hierarchy? And what would it take to move the continent up the stack?
Yeah, it's an interesting question. Right now, as I mentioned earlier, the Africa region represents less than 1% of data center infrastructure. And over the next, let's say, 5 to 7 years, 5 to 10 years, um, Africa is probably going to add another 500 megawatts of capacity. A lot of that will probably be driven um, by hyperscale demand. And so we could be looking at 1 gigawatt of capacity across Africa, over 7 to 10 year period. But that will still be on a relative basis, Africa would still be underinvested compared to other regions. And so, there will be, a need to continue investing in this infrastructure in the Africa region as a result. Just given the size of the populations, given the growth, and just given the demand for data and the trends that we're seeing in terms of data cost, the trends towards increased fiber, international subsea fiber capacity that's coming into Africa is going to lead to higher traffic, higher data traffic. It's going to lead to lower costs. So there will be increased demand for data center infrastructure as a result. Um, so I think there's going to be a need for more. If you think about it as a pyramid, at the bottom of the pyramid is sort of the infrastructure layer, and so there's going to be a need for further investment, significant investment at that layer. Um, but there's also going to be a need for more capacity building, right? So building the skills, whether it's the skills for, people to be able to operate data center infrastructure, skills for developing, being able to build, develop, AI applications. Um, there will be a need for a lot of capacity building, and that's where again, on a relative basis, although we have, 15% of the global population, if you look at from a skills perspective, we're in the Africa region, we don't have the same level of capacity when it comes to using these models, using foundation models, using different AI tools. That's an area where we really need to catch up over the next 5 to 10 years. And so on a relative basis, when you look at other regions, Asia, Latin America, Eastern Europe, I mean, these are regions that are really investing significantly in capacity building. And whether it's the governments or the private sector, uh, are, are providing resources for people in these regions to be able to acquire the skills that are necessary um, to use to either use or develop new, AI tools. And so I think in terms of that's that is that's where we are in terms of the Africa region on a relative basis. And so in terms of how we move up the stack, I think it's really going to be sort of twofold. There needs to be a twofold approach where on the one hand, there needs to be a increased focus on data center infrastructure and looking at other parts of the value chain, whether it's, power, chips, um, various aspects of the value of the data center and AI value chain, and trying to find ways where we can potentially localize as much of that as possible within the Africa region, within different African markets. And then on top of that, then being able to invest in these capacity building skills. Um, and that's very important. And I would say, the overarching need is this sort of developing these enabling regulatory environments that attracts the investment into these different markets, that attracts local investors to invest and support the development of these sectors, attracts foreign investors to come in, and so that's going to be a bit of an overarching theme that we need to see in terms of how do we get, how do we move up the stack, right? There's going to be an infrastructure component, there's a skills component, and then there's the sort of the regulatory component as well. And I think when we're actively moving forward in all of those areas, I think that's how we end up moving up the stack over time.
Okay, thank you so much. Sorry, let me close this. Yes. All right. Thank you. Thank you so much, Obina. So we're getting to the end, but let me ask you one or
Okay.
two more questions. So if there was a silver bullet that we all need to do, one decision that would significantly accelerate digital infrastructure deployment and development across the continent
Hmm.
over the next decade,
Hmm.
well, that one thing that you advise operators, policymakers, investors to double down on? What's that one thing we should all do?
Yeah, that's a tough question, Timmy, because it's always, this is such a highly evolving, dynamic space, right? It's and anything that I say today, when we speak again in the future, you may say, you may say, I'm sure
Thank
you'll ask me this question again. What did you think about what you
you.
said? But look, my what I would say about that would be, if there were such a thing, the one thing I would point to would just be collaboration, right? There needs to be collaboration because this is a space where there are, many different actors, many different players on both the public and the private side. We need to have more collaboration across the value chain, public sector working with the private sector. We need to be able to attract global players. We need to attract local investors. We need to develop local talents, local capacity. We need to invest in infrastructure. So there's a number of different players that we need to be able to bring in, work together to collaborate to be able to move these markets in the Africa region forward over the next 5 to 10, 15 years. And no one player can do it alone. The private sector can't do it alone. The public sector can't do it alone. There needs to be much more collaboration where there's constant dialogue. We're developing these plans together, and we're leveraging on, the strengths and the capabilities of different actors, foreign, local, private sector, public sector, bringing everybody together. And I think that's if there was such a thing as a silver bullet, that would be, I think, the one thing that it could be.
Okay, as an investor, what would success look like? So maybe you wear two hats here. You're an investor, but you're also African. So you have a lot more skin in the game. If we look back, if we look 10, 15 years from now, if we look back, what would success look like for you from an investor's perspective? If you look at the whole digital infrastructure landscape in Africa, what would you be happy
Mhm.
to see and take in 10 years? We did this and and this was very good. What would that be?
Yeah, that's a great question, Timmy. And yeah, look, I think there's going to be a number of, ways to look at that, right? So I think that success in our mind would really involve seeing that that a number of um, that the regulatory environments in a number of in our countries in the Africa region have been developed in a way that they are enabling and they're attracting foreign and local investment, right? So that's I think that's definitely one key element. I think another key element would be that we're seeing a significant amount of infrastructure has been developed in this sector in data center in for the data center space. Um, and that there's more energy power infrastructure that has been provided as well, so that so that the data center projects have the energy that they need, and it's renewable energy. So I think that would be a really big element of success, that we have a significantly more data center infrastructure and renewable energy to power that infrastructure. And then, of course, we would want to see that, we see more hyperscale presence in more markets. So we have availability zones in multiple countries across Africa, not just Nigeria and Kenya, but in markets like Egypt and Morocco. And we just have more hyperscale presence even in secondary and tertiary markets, right? I think that's going to be another key element. And I think lastly, just being able to see more skills development, in across markets in the Africa region. So we have more, tech hubs, as we have, for example, in Nigeria and Lagos. We have we have a great tech hub in Nairobi, in Johannesburg, in Cairo. We need to see more tech hubs across Africa where skills are being developed, AI applications are being developed. More homegrown talent is being developed, right? So and more AI startups, more AI, more cloud native businesses are coming out of these tech hubs in the Africa region. So I think these would be some of the areas that, looking back 10 years from now, that if we see them, we can point to them and say that this would be um, the type of success that we would like to see.
Thank you, Obinna. So is there anyone who is doing significant work, digital infrastructure work or policy work, either across the continent or outside the continent that you think we should learn from, we should speak to? Is there any such operator or person or that you think we should speak to on this series?
Yeah, let me think about that. I have mentioned a number of other markets where I think it's worth studying as case studies. I've mentioned a number of some of the top players globally and within the region as well. So I think if you go back and maybe listen to this our conversation, you may pick up a few ideas there. But I can also think about it as well and make some suggestions.
All right. So we have a question. I'll lump that into one. Um, what do you think about edge data centers, especially for Nigeria? Um, and then, if there is no African hyperscaler, why don't we create a hyperscaler ourselves?
Okay, that's those are interesting questions. So on the first question on the edge, we've invested in Raxio data centers, which is an edge data center operator. Raxio has developed edge uh, infrastructure in seven countries across Africa. The edge data center is going to be something that it's the type of infrastructure um, uh, that will be needed in the Africa region because edge data center infrastructure tends to be smaller, so it tends to be around half a megawatt, potentially up to a megawatt in size. And it can even start as small as 250 kilowatts, and it can be developed on a modular basis, right? And it can also be deployed in secondary and tertiary markets within a country. So if you take a place like, for example, in Nigeria, Lagos is sort of a tier one market in Nigeria, but then you have tier two and tier three locations. So you can have Abuja, you can have Port Harcourt, Enugu, you can have Ibadan, Kano, all these other markets, all these other cities in Nigeria can be considered tier two and tier three locations. And you can see there in the future there will be a need to deploy edge data center infrastructure in those locations. Anytime you have, for example, mobile operators who are deploying thousands of towers within a country, there's going to be an opportunity for some of those mobile operators to deploy some edge data center infrastructure at some of their towers, right? So there's going to be um, use cases for edge data center infrastructure across Africa because, Nigeria is just one country. We have 54 countries in Africa, and any market where you have more than 1 million people in terms of population, there's probably going to be a need for some type of edge data center infrastructure in that location. And Nigeria has at least 10 cities that have more than 1 million people. So when you then aggregate that across Africa, whether it's from the towers perspective or from the population perspective, there will be a need for more edge data center infrastructure in the Africa region over time. So that is definitely an opportunity that we do see. The question will always be around what is the business model? How do you finance this? How do you operate that? How do you develop that infrastructure sustainably? Right. So those are the questions that we still need to see being developed and answered, and that's where the private sector really needs to come in to work on those types of questions. But those would definitely be opportunities. And in terms of the second question, and just remind me, what was the second question again?
Why don't we have local hyperscalers?
Why don't we have local hyperscalers? Yeah. Yeah, it's an interesting question. I mean, look, um, you know. part of it is that the hyperscale business is definitely an economies of scale business. It's definitely economies of scale, right? So that's one issue. So you need to be able to develop infrastructure that can be used globally. When you think about the hyperscale business, you're offering infrastructure, cloud. You need to be able to create tools that can be used essentially globally, and you need to be able to develop global infrastructure. Okay. And so, for example, if you're developing infrastructure that is just being used in one region, from a cost perspective, if someone else is developing cloud infrastructure that can be used globally across multiple regions, there will be some cost advantage that the global provider will have over a regional provider, right? So that's one aspect you have to keep in mind when you think about um, um, the hyperscale business and whether you want to create a regional player. So you need scale, and the Africa region with over 1 billion people, there is definitely scale there. So I'm not saying that it's not possible, but you always have to keep in mind from a competitive standpoint that if you're going to develop that type of infrastructure, it does need to be able to scale, for example, across the whole region. And you'll be competing against other infrastructure that has scaled globally, right? So, and then obviously there's always going to be questions around technology. Do you have access to the latest technology, the latest skills? Um, and so that's also from a competitive standpoint, because customers in the Africa region are looking for they want to have access to the latest technology, the cutting edge skills out there as well. So there are a number of elements that have to be considered, but I think it is important to find ways to develop solutions that do cater to local dynamics, right? So I think that is something definitely worth considering and pursuing. But you have to just keep in mind some of these other competitive dynamics when you're thinking about that type of question.
Obinna, thank you so much for your insight today. It's been a very interesting, very interactive session, and I believe it's been for listeners too. And I think we got quite a lot of nudges from everything you said. Need for more capacity building in digital infra. Need for more capacity building in data infrastructure. As again, we have to look at not just for the operators themselves, but also for funders, especially as we are exposing funders, private capital, sovereign wealth funds, pension funds to digital infrastructure projects. Also, a very strong theme that came out from today was the need for collaboration. And it's been such a delight having this conversation with you. Our next session, thank you to everyone who joined us today for being a part of Africa Hyperscalers, a global view. Next week, we'll be speaking with G. Zibi, founder and managing partner of Zalam Analytics. He's one of the leading research and advisory firms focused on Africa's digital infrastructure and technology markets. If you've read anything in digital infrastructure, Zalam probably wrote it. If you read anything in the past 10 years, they probably wrote it or they contributed to it. And through their work, Guy has developed a detailed view of how value is created, distributed, and captured across the continent's connectivity and data center ecosystem. So be speaking with him next week. Please stay tuned for that conversation. It's going to be a very interesting conversation. And I think there's already a link. We have dropped a link in the chat. Please register for that, because we would explore where value sits within the digital infrastructure stack how market structures are evolving, and so on, and touch on obviously AI, infrastructure demand, investment trends, and so on. Please register. We look forward to that chat. Thank you all so much. Thank you very much, Obinna, for a very interesting
Thank you.
session. Have a great day, everyone, and happy Mubarak. Bye, everyone.
Thank you.